Hi, hello everyone. Welcome to Money Map. Today we want to look at the challenges with foreign exchange in Nigeria as a direct fallback of the press conference gathered by the CBN governor when he blamed the website known as Aboki FX for the for our Naira woes. So the CBN governor Dr. Godwin Emefiele spent enough time, telling us about how a certain Aboki effects, how they manipulate the Nigerian currency, and how they've contravened a central bank law about who is authorized, to publish exchange rates. So we want to see whether these Aboki effects, whether they are indeed a economic saboteur or just a scapegoat. So for those who have not, I'm sure most of us have, we are conversant with our Aboki FX website. I mean, checking it for daily rates. It's been the reference point for most of us for a long time now. But now we cannot really talk about the FX issue without talking about foreign reserve. Now, when you talk about foreign reserve, so foreign reserve is just the kind of investment a country has. So every country has uses dollar as a reserve currency. So when you are trading with each other across the globe, everybody will use US dollar. So meaning that everybody has to maintain a foreign reserve. So foreign reserve are investment you have in other foreign currency. So usually, mostly on the average, about 60% of every country's foreign reserve they are in United States dollars. Of course, some could have euros, some could have pound sterling, and it's not just cash in banks, in foreign banks. It's also include assets like gold, like treasury bills, bonds in foreign bank. The purpose of this foreign reserve is to defend your local currency. So since everybody is using dollars to do their foreign transaction, if anytime you need your own currency is under pressure, you can sell some of these foreign assets to meet your FX needs. So the size of your foreign reserve is what you use to protect the value of your currency. So how do you build your foreign reserve? If you well, so for instance, here we talk about trade balance. So if you export more than you import, you will have more foreign balance, more foreign currency. So that's part of your source of foreign reserve. If you have transfers from abroad, remittances, people transferring your diaspora, people remitting from, it comes to your foreign reserve as well, because you now have a balance of foreign currency. So also those who bring their money to invest in our country, which we call foreign portfolio investment or foreign direct investors, they are also, the money they bring together also form part of the foreign reserve. So the more you have this, the more you are able to preserve your currency value. So now, what has been the problem over the recent time? Let's look at, so because we're talking about trade balance. So in Nigeria, most of our exports, they are in crude, crude oil related, whether gas, whether crude oil, whatever. So everything we export, 80% of it, therefore it is from crude oil. So anything that impacts the price of crude oil will affect our foreign reserve. Now here we have a chart. If you look at this place, we have chart in terms of so we have two charts together: reserve, our foreign reserve in billion dollars, and also the price of crude oil. So this other line, this orange line here, is the crude oil price, and the other line below represents the foreign reserve. So what do we notice? They follow the same pattern. So the crude oil is a dollar per barrel. So when you look at the crude oil, you see that the peak is about $75 per barrel. Look at how the price comes down sometimes to something below 40 dollars per barrel. And you see that even the foreign reserve, this line also represents the foreign reserve, such that as the prices of crude oil per barrel goes down, you also see our foreign reserve. So look at it, like, so the current level is about 35 billion dollars, $5 billion as we speak. So once the crude oil prices start going down, you see the balance going down. And once that balance goes down, the CBN will not have enough ability to protect the naira. So that if people need more dollar, to maybe because we have more imports than export, so for to make, because when you are going to import from a foreign country, You are not going to use naira to buy goods from China. I mean, every importer knows that you will need to change to dollar. So mostly you go from dollar. When you get to China, you change to yuan. So the challenge is that when you are going for importation, you will need the dollar, and that dollar will come from the foreign reserve. So the problem has always been that the reserve goes down, which is like savings account in a foreign bank. It goes down as we do more importation. So, and all through the years, I mean, this is a chart from 2015 till date. You can see different points up. So this was last year. You see that the crude oil price fell to a very low point, to like about $32 per barrel, yeah, last year, because of coronavirus. So everybody was on lockdown. Even if you want to import things, many your exporters are not exporting from abroad. And so all through this period, it has affected our dollar, our exchange rate, because we don't have dollar to exchange for naira. That's just the problem. So we are not talking about any website yet. The problem is our whole trade is based on a single currency, a single product, crude oil. And so if anything happens to crude oil, either they are shutting pipeline somewhere, or there's a virus somewhere, or there's a production loss. So look at different times in the past. From in 2015, 2016, there was global oil glut. This made crude oil price to fall below $30 for almost 18 months. So this affected us. I mean, I fell below $40 per barrel. This affected us from 2017 to 2018. So what they did, the countries producing, a group of countries producing crude oil, I think they call them OPEC, OPEC, they agreed that, okay, you know what, for us to control the price of this crude oil, let us reduce the quantity of crude oil that we export. So which they did, and that improved the price. That improved the price a bit. But from 2019 again, so before, the production of the United States in crude oil production wasn't enough for their local economy, so they even had to ban exportation. But later they found a new technology called shale oil production. So that's yeah, they started producing a kind of crude oil, an oil that served the same purpose as crude oil from shale rock. And this technology made them to start producing. So immediately this started, there was a kind of oversupply of oil again, and this affected the price, and this brought down the price of started bringing down the price of crude oil even before corona. And what happens to our foreign reserve? It went down. So the highest we've had was about $47 billion here, this line, about $47 billion around 2018. But it has seen falling to 30 35 around $35 billion as we speak. So the lower that foreign reserve, which is like our investment in foreign accounts, right? The lower the lower that investment is, then the lesser the ability of the central bank to protect the naira. Because if you ask for importation of anything, the CBN cannot get the dollar to give you because of the low balance of the foreign reserve. So that's in our view is the challenge. Now, how did we even get to that problem? So there's also the other issue of inflation. Now, so these lines also represent all these things that are happening in the economy. So we have a problem. Inflation rate. We all know inflation rate, where our money loses value. We know the price we used to buy a standard loaf of bread 5 years ago, and the price it is now. So this is like an arm robber, robbing, stealing money from us. Is exactly the same effect, because our money worth less. So what is the problem? We are not trying to look at things that's causing the problem of foreign exchange as we speak. So you will see from March 2015, look at our inflation rate. It's this line below. You see at a point our inflation rate was like 10%, it grew to 15%. But something funny started happening from last year. So we have a rate of inflation in one hand, and the interest rate that we earn when we buy government securities like treasury bills. So for treasury bills, so this orange line, it represents, because you see at a point we were getting 18% on treasury bills. Right now, then it started falling. You can see from 2018 it started falling. As we speak now, the interest on treasury bills is at about 7 point something percent, about 7.2%. Meanwhile, look at the inflation line at the top. Inflation line is much higher. It's much so. Inflation now, the last inflation figure for August, we had 17.01%. So your money is losing value by 17.01, but when you keep the money to use in the future, you are getting 7.2% interest on it. So you are actually suffering twice, because you are not enjoying your money now, you are keeping it for the future, but as you are keeping it, you are losing money. So people saw this. You can see. So look at this point. At this intersection point, that was around December 2019. The interest rate on investment, 1 year investment, started going below the inflation rate. So what that tells most of us was that, oh, there's no point keeping our money in treasury bills. Why do I keep it when inflation will steal everything away from me? So what happened? So people started buying dollar. So it is not just today that people started buying dollar. They started buying dollar long ago. Immediately they say that they cannot keep money in naira when inflation will eat everything. How can I be facing inflation of 15, 16, even 18% at some point earlier in the year? Then what I get, and last year, around March this thing, the inflation, the what's it called, the interest rate fell as low as 1%, 2%. Who will do that? So people have started. So the government created that situation whereby they are paying very low interest, meanwhile inflation was very high. No, they had a justification. They had a kind of justification for it, which was that, oh, if the interest rate was low enough, businesses will be able to borrow money at cheap rates and be able to do more business. But that did not work. These were businesses that were under lockdown or due to corona, businesses that are facing herdsmen attack. So even if you have money at 0%, you cannot even do the business. So that did not work. And so people started buying dollar and keeping since that time. So that's part of the issue. We have the foreign reserve issue. We have the issue of interest rates not compensating for inflation, and thereby everybody started leaving naira investment. So when you go and buy dollar, you notice that, oh, I cannot keep my money in naira, let me buy dollar and keep. Yeah, it's already affecting the naira long before, even before now. And all this started since around December 2019. So let's bury the talk of one website or not. And there's also another reason for the government allowing this, making this interest to be very low. We have the problem of national debt. This chart, we are looking at our debt profile as at quarter 2021. 2021, that was around March. This is the last update we had for the debt management office. So this is the total debt, 33.1 trillion. That's what Nigeria is owing. Look at the domestic portion of it, 20.6 trillion. Now, to put it in context, in 2015, when this administration came into power, look at Q1 2015, as in the debt as at March 2015, the total debt was 12 trillion naira. 12 trillion. Now we are talking of 33 trillion naira. This is more than almost 3 times growth in debt. And so all this debt, they pay interest on it. So one of the reasons we are having a low interest rate, because we have borrowed too much. The country has borrowed and we are still borrowing. So the interest cost is killing the country. In fact, at the last count, it was reported that they were now using about 90% of the total revenue, whether it's VAT or whether it's company tax. So we are now using it to pay for gbese on debt, pay interest on debt. So that is why they are making it low, not forgetting that there's inflation, that people will not have incentive to keep naira. Or don't let them say they are forgetting. They know, but they just choose to go to that direction. And so that's the problem. Debt is making us, the CBN, to be putting out low interest rate that does not compensate you and I for keeping money in naira. And so we look for dollar, and so we can't be pretending we don't know why naira is falling, because nobody wants to keep naira. Because when you keep naira, you will lose it to inflation. So that's the problem of national debt. Now there's still another issue of capital importation. So when we say capital importation, that is when foreign investors bring money to our country. So usually they do it through what we call foreign direct investment. So foreign direct investment, that one talks about when you bring money to invest in, to build company, you buy land, you install machines, they start producing, like a Procter and Gamble plant. That's foreign direct investment. Then you have foreign portfolio investment. And then you have foreign portfolio investment. That is when foreigners bring money to buy shares in Nigeria, to buy treasury bills. So it's just, so that's our investment they just do. Come into, just like you and I buy shares, buy treasury bills, and they don't buy any land, they don't install any machine. That one, they can sell their investment within 2 days and exit. But look at, no, I brought this up now to show, to put it in context. So in 2019 Q1, look at the total here. This data is from the National Bureau of Statistics. $8.5 billion was brought in 2019. But look at every other quarter. In by Q2, it has reduced to $6 billion. By Q4, it has reduced to $3 billion. That was 2019. You can see the gradual decline. They stopped bringing money. They stopped bringing money, right? So if you go to 2020, we said that first quarter of 2019, we had 8 point something billion. By 2020 Q1, we have 5.8 billion, the money they brought to Nigeria. And this money is also forms part of what comes into the foreign reserve, the net balance of fee. So it's also part of it also move to the foreign reserve, because we have to keep their money for them when they're in Nigeria. Because when they bring money from abroad, they will change the money to Naira. They can't use dollar to invest in treasury bills, in shares in Nigeria. It has to be Naira. So when they change it, we keep it for them until when they are leaving. So we can see what was 8 billion a quarter now has now turned to $1.2 billion. You can see 1.2. So the total for 2020 was 9.6 billion compared to 8 billion for a quarter total for the year. So there was a massive decline in foreign for capital importation, whether foreign direct investment or foreign portfolio investment. To even make the matter worse, 2021 Q1, you can see 2021 quarter two, that was as by June 2021, what used to be like 8 billion in 2019, see what we have. We don't even have 1 billion anymore. It's just $875 million that people have brought, investors have brought into country. So this is affecting. You can see so many interplay of factors. We are not exporting as much, or we are not paying correct interest rate that compensate for inflation. Foreigners are not coming. So look, so they are not bringing money, because during that corona, when corona started, a lot of them wanted to withdraw their money and go back. The central bank did not provide the money for them. It has its own, so it helped, to be fair, it helped our local investment, because that will have made the stock market to crash. If you remember very well, stock market did well last year. So as they were trying to sell, the CBN was not giving them dollar, because when they sell the shares, they need dollar to take back to their country. The CBN was not giving them, so they couldn't sell, so they stopped selling. There were some reinvested. But what that did was that there was now lack of confidence, so they stopped bringing money. So because they realized that, oh, whatever money I make in Nigeria, by the time I leave for my country, I want to leave, I will not get dollar to repatriate my investment. And so that is what has brought this now. So for us to have our foreign reserve at that dollar we need them to come back, but they have lost confidence. And the only condition, a major condition they are giving us to bring their money back to Nigeria, is that there will be a convergence of rate. So the official rate now, the exchange rate is about $411 on the what they call importers and investors and exporters windows. But when you go there, you cannot get the dollar at that rate, so it's scarce. But if you go to the black market at this 570, they are talking about 570 naira to a dollar or whatever, you will get any amount you need. So that means they are saying that, look, don't be deceiving us with this so-called official rate. Let the rates be the same thing, so that we know that we can get our money at any time and leave. But so far, you see, have a wide gap between the official rate and exchange rate. It means that the official rate is not correct. The official rate is not correct, because if it's correct, then we won't have that wide gap. Sometimes in 2018 to almost late 2019, we were having 360 naira in official rate, and maybe just 2 naira difference, like 368 in the parallel market. That was fine. But you can't be talking of 411 to 570. So they are not ready to come back, because first, they've seen that they may not be able to take their money away through the official channel. And so if the official channel, they cannot get their money, they want to see that, okay, when they bring their money, it will be correctly priced. So because if I bring my money now, you price it for 11, because that's the official rate. When I now want to go, you now ask me to go and to go and buy it at 570. I've made all the profit I came here to make. I will lose it automatically to exchange rate. So that is another so that is the problem. So there's nothing about website issue here at all. So this now brings us to what we call economics will call vicious cycle. So it's not, forget about the big English. A vicious cycle is just mean that something bad happens, and because of that bad thing that happened, and it continues to create a sequence of bad events, because bad things give birth to bad things. So that's a vicious cycle. So let's look at it in terms of what is happening with our forex. So first, you see FX becomes scarce because a fall in crude oil price or foreign portfolio investors are leaving. So you first scarcity. So that's the first bad thing to happen. So once the CBN sees this, step two, they will start rationing dollar. So what is happening now? If you apply through your bank, maybe you want to import something for China, if you ask for 100,000, all you will get is $20,000 instead of $100,000. So you have a shortfall of $80,000. What are you going to do with that? You have to go to the same parallel market. There's no magic to that. So that's number two. But at the third stage, when the users of FX go to parallel market, you source the shortfall. The fourth step, because you source the shortfall, Naira depreciates in the parallel market as more FX needs are met at the parallel market. Now, immediately people hear this, oh, it has depreciated though. What will happen? Everybody will start going to panic buy, to either to speculate or to for precautionary reason. Oh, this thing is Naira don dey fall again. May I go buy, make I keep. So you see that one bad event leads to buy, and the cycle will continue until something, an external force stops it. So from the scarcity to people rushing, then people will go buy more FX in panic or for speculative reasons, which will further depreciate Naira. So even as you are speaking now, any of us that goes to the market on Monday, let me buy because it's going to look like, because with this what the CBN governor said, it's sounding like they don't have any solution to it. So it may well go to $1,000. So but if we panic and go to the market to buy it, we are the one making that prophecy. That prophecy will become self-fulfilling, because we are afraid, but our action is helping what we fear to actually happen, right? So how do we break the chain? Is the CBN not CBN can do it, and so also other government organs can do it. So what are the things that can be done? One, we talk about the interest rate not compensating for inflation, which is make people to buy dollar. So government can increase interest rate. You see, the CBN knows what is happening. They are not stupid people. Whatever they say to us, they know what is happening. However, almost every option they will think about, there's a huge cost which they don't want to face. So if you increase interest rate on government securities, we're talking about bonds and the rest, that's a short-term solution. You're going to have high interest expense. We've already talked about the public debt, how the public debt is at a crazy level that we cannot sustain already. We are using 90-something% of revenue to service it. So if you increase interest rate, you see a very high, that means all revenue will not even make anything. So they are shying away from letting the interest rate compensate for inflation. So that's an option. If they do that now, some of the money in dollar, people will feel, okay, let me buy treasury bills now, because at least it's high enough to protect me against inflation. The other thing they can do, so they devalue the Naira. It's also a short-term solution. So they are saying it's 411, 412, but don't let us deceive ourselves. Maybe the Naira is actually around 460, right? Make it 460. Yes. And once you do that, you'll be able to use more, you'll be able to preserve your foreign reserve and exchange more Naira for a dollar officially. So but that has a cost. They are trying to fight against inflation. That will bring inflation on the short run, because now prices of all those imported goods will now go up officially now, right? And they are trying to avoid that. So that's also a short-term solution. This another short-term solution within the purview of CBN is what some people have said, which the CBN has denied vehemently. But we cannot say it's not possible, because they are in a very difficult and desperate situation, which is to take over all the FX deposits. And we say, you know what, all your dollar in your domiciliary accounts, you cannot take it out, or we give you a fixed exchange rate for us. That is something they can do, right? Though they are not like, so this will also lead it will also lead cause inflation rate, right? It will also cause inflation rate and also politically, because I mean a lot of government functionary politicians are the ones in this they are also in these dollar businesses, and it will affect them. So what this does is that it will limit speculation against naira. So it's not like the CBN governor was right about speculation. Many of the dollar people are holding now, they don't have plan to do anything with it other than speculate or to hedge against inflation. So if you don't have a need for it, you don't have school fees to pay, you don't have medical bills to pay, you are not buying goods, keeping dollar that is not your currency, it's actually hurting the naira. There's no two way to say it. But so if they take over FX, except people are now hiding it under those who have taken it abroad, or those who have dug sock away and kept their dollar, sir, it will reduce the inflationary pressure and speculative activity on naira. And the real long term solution is that for you to have a positive foreign reserve balance of payment with other countries, you just have to export more than you import. Or if you are not even importing, at least produce what you need. So we need to build our productive capacity, knowledge to do this. I mean, what are the things we import? Shoes, bags, motor cars, mobile phones. Where is the knowledge to make it in locally? Where is the knowledge? Can our training institution, can we really start building these things tomorrow? So there is a need for more education, real productive education, where people will be able to make things we are importing. That's not going to happen next week or next month. It's probably a 10-15 year journey. So it's a long term solution. What are the infrastructure? Where are the rail? Where is the rail? Where is the road? Even to bring things? Where is the security to produce and export? All these things are not there. All these things are even outside the purview of the central bank governor. So that's why he's helpless. He cannot do all these things. Is there the political will to do this? This is the long term solution. Every other thing we have been talking about are just like cosmetic measure. We have to be productive. We have to export less than we import, right? That's the only way to have a positive, a very good exchange rate, or a stable economy. And the real deal are outside the purview of the central bank governor. It takes the politicians to come together and fix it, and the result we will not see it in 1 month or 2 months. It may take a 10 or 15 year journey. Or the sad part is that we have not even started this journey. So for us, what are we looking at? Because we know there is no political way to address the real issue. So on the long run, you will still need to keep dollar investment on the long run, because we are not addressing the real issue yet. However, the current 570 naira to a dollar that we have is not real. Most of it, I mean a single part of it, is due to speculation, and there are things that the CBN can do to bring it, to correct it back to around 450 naira. They have done it in the past. In 2017, naira was already 540 in the at the parallel market. The CBN took some action. They created the investors and exporters window, that it will run independently, that will make the official rate to be the same, to be market driven, and the rate crashed to 360. People burnt and lost money that time. So on the long run, because we have not done the real things, naira will continue to depreciate, but the current 570 naira is somehow inflated. So if you want to buy it now, well, you can buy it, but it's better you buy it for long run. But um if you are buying it that, okay, let me buy because it's going to, it may go to 1,000, which is true. If the CBN chooses to act, they are not acting now, because as we have seen now, it's all their action has serious consequences, so they are shy. But if they decide to act, the 570 today can come down to 450, 460. All right. So if anybody wants to buy, also have in mind that if you are lucky, they take no action, it may get to 700, it may get to 1,000. We don't know what the CBN will do, but we know there are things they could do which may be costly and painful, that will bring it to 570 on the CBN side. But the long run is that naira will continue to depreciate as long as we don't address this issue. So that is how the matter is. Thank you for listening. Please subscribe to the channel and for more content like this. Thank you and good day.